You got to do it. Oh, God, he just disappeared off the screen. You start the show, you disappear. You can't start the show and disappear. You got to start the show and appear.
I had to hit record on my mic because I don't have a fancy USB-C mic like you. Hey, hi, welcome.
I'm out of coffee.
All right, we'll edit this out. Okay, hang on. Here we go. And Alvin. It is October 18th. Spooky season has come.
Spooky.
It's scary out. It's crisp in Florida. It's like 70-some degrees.
You were wearing flannel the other day.
Fall is upon us. It is spooky season, but the spookiest thing that I want to talk about is Al recently turned 37, and it's scary. It's scary because he ain't getting any younger, folks, and he's an old fart.
Started keeping a tray of Werther's Originals on my side table in my living room. But Ab, you'll get there eventually. I mean, you gotta understand, Ab's a spray. He's a young, spry. 10 to 15 years younger than I am. You can see it in his little tiny bird face. His youthful face.
Yeah.
No facial hair. He'll get here eventually. But yeah, I get a lot of knowledge, a lot of wisdom that comes with being 37, right? Chugging towards 40. So it's
yeah. You'd think that you'd get more humble with your age, but that hasn't happened yet. We'll see.
Absolutely
when you hit
not.
40. Maybe you get humble when you hit 40.
Straight to my big head.
So here's something that'll humble you, Al. Rates have consistently gone up just about every day since the Fed lowered their rates. What's going on with rates? Can you tell us a little bit about that?
It's a big kick in the pants. It's not like they're back to where they were last year. They're not to where they were, the worst in history at all. But they're up. Right, they're up a little bit, so definitely frustrating. I mean, you're talking about a conventional in mid to high sixes. Government loans are probably low sixes, but still up from where they were. I don't know that they're really going to come down until the election, but based on what's happened recently, nobody knows much of anything. So we'll just kind of have to ride the wave and see where it goes.
Yeah, and I'm just going to continue to stick by the thought that I've always had. 13 years in the business, I've always kind of thought like it's circumstantial. These rates, yeah, they're less than perfect and they're going the wrong direction, but it doesn't mean that everyone should get out of the market, get out of the home buying market, or shouldn't refinance. There's plenty of opportunity out there. But let's take a look at why rates might be rising. Maybe we could possibly, dare I say, discuss the scapegoat. All right.
Stop it.
And if you go out and you do a couple Google searches, you'll see that it's all about the labor market, baby. Mm-hmm. It's all about the labor market.
All about the labor market, and I'm excited to finally find out what's going on behind these rates and why they keep going up. Ab, is there any way you can shed a little bit of light, just a smidgen of light, on this terrible, terrible problem we have?
Yeah, so like I said, it has everything to do with the labor market. We had we had some jobs reports come out this week, so we'll get into some of that. So let me do a quick screen share. So first thing that we're going to look at is the jobless claims. Is that the jobless claims? No. Yeah, jobless claims. So jobless claims, as we talked about in the past, are the number of people who are filing for unemployment for the first time. So these people that we're assuming are newly unemployed and they're looking for unemployment checks. The initial jobless claims number came out stronger than expected. The number of applications for unemployment unexpectedly fell. Initial claims for unemployment benefits dropped by 19,000. And this is off of 19,000 off of a number of a forecast. Economists forecasted that number to be 260,000 claims, so down quite a bit from what they expected. So it's a sign of a thriving and bustling labor market, hot labor market.
It's a hot labor market. It's flaming hot, which is fantastic for America, and we love America. Go America. However, that being said, anytime you have positive news when it comes to the labor market, that tends to mean bad news for mortgage interest rates. That's just the way life goes. So we root for America, but unfortunately that hurts our rates.
Hurts our rates. And you know what? I guess I could speculate as to why that would hurt rates. I think that does the Federal Reserve see a hot labor market as a threat to the inflation? More people working, more people making money, more people spending, higher inflation. Is that the fear? I don't know, but that it's like kind of the line that I'm able to draw. The next report that came out this week that I would like to talk about is the jobs report. So this is the number of new jobs added. So according to the Bureau of Labor Statistics, U.S. jobs report for September 2024 significantly exceeded expectations. The economy added 254,000 jobs, which was much higher than the anticipated 150,000. The strong job growth led to a slight drop in the unemployment rate, which fell from 4.2 in August to 4.1 in September.
Yeah. So, I can tell you what those 254,000 jobs weren't. They weren't mortgage jobs. You know what I mean?
Yeah.
People are getting out. These people have been getting out for a while. And it's a tough racket. Stick a microphone in somebody's face and have them talking about unemployment rates, try to get business, try to get applications.
Yeah. Hey, look,
Right?
we're doing what we got to do. We're doing what we got to do.
Do what you got to
Look,
do.
It's 2024. At least I'm not out there talking about my favorite park in downtown Stewart and trying to
Right.
be a lifestyle influencer, which, hey, don't put it past me. I'll do it. Al.
I think everybody would love to see that. I think it'd be a nice breath of fresh air for the folks of Stewart. But we need you. We need you right here in mortgages, and we need you talking about jobless claims and job reports and unemployment, because God bless America, this is what you're built for, right? So keeping them educated.
Well, here's the thing. All right. Not everybody needs a mortgage right now. Not everybody gives a shit about mortgages. Hopefully people watch us because they think we're charming and we have some value to add.
Most likely.
The economy, it relates to the mortgage rates. But the fact that it relates to the mortgage rates is just a conduit to give us a reason to talk about it. I think that these reports, if you're voting, if you're the head of your household, whether it's you and your wife, you and your girlfriend, whatever, if you're working in this economy, if you're a citizen of the United States and you're awake, you should pay attention, or at least hear me read it off of the report.
And give a nice little sprinkle of why you think that that impacts mortgage rates and things like that. It's great. It's wonderful. We're out here taking shots, for the love of God. We're trying to explain it to the layman.
Yeah, and hey, you're growing with us. This is new to us examining these reports. But if we're gonna be doing it, if we're gonna be doing mortgages, I'd rather be well informed, or at least attempting to be well informed, than not.
Absolutely. Well, we need to understand the reason behind it. You can't just follow this roller coaster of the 10-year Treasury bill and whether or not the Fed is going to raise or lower interest rates, right? So it's nice to understand the why and kind of anticipate where things are going to go ahead of time and explain it to you fine folks out there, viewer.
Yeah, and this is kind of what you get. Sometimes Al and I get at each other, and if it feels like right now that Daddy just slapped Mommy at the dinner table and it's a little awkward, it's not that at all. We'll hug and kiss and make up, and that's that.
No. We've been doing this for about 26 years.
So let's not get off track here. I want to stay on unemployment just for a second. Actually, not a second. I want to spend the rest of my portion of the show talking about unemployment. The unemployment rate is it's a big ticket item. It is an easy it's an easy number to point at and say, here's a healthy economy, here's not a healthy economy. So I wanted to, for myself, kind of figure out what goes into the unemployment rate, how it's calculated. Since it's just garnering so much attention, it went down and the labor market's on fire, right? So, as most things, as I try to look into this, I find that the devil's in the details, Alvin.
Devil's in the details, baby. You do say it.
So what do we say we take a little deep dive here into a little unemployment? Let's take a look at the history of unemployment.
Dying to take a deep dive into unemployment history. This is what people have been clamoring for.
So this is a great little infographic on
This is one of your better infographics, I will say. I love this. Peaks and valleys.
Peaks and valleys. So you can see here a look at the historical unemployment rate, where it shot up, where it shot down, what was going on in the what was going on in the world. So the highest unemployment rate was 24.9% in 1933 during the Great Depression. Al?
Rough time. Tough time for America. Tough time for Americans. Rough time. Great Depression. Very depressing time.
Somehow you can make the Great Depression funny. All right. And the lowest unemployment rate was 1.2% in 1944 during World War II. Alvin.
Yeah. I mean, you got to get everybody out. We need all hands on deck, right, Ab? You got to be out there. You got to be in a factory. You got to be on a ship. You got to be on an airplane. You got to be on an airfield. You got to have a gun in your hand. Rosie Riveter out there. All the women were getting back to work. It was, created the greatest generation.
Yeah, and if you weren't on the front lines, if you weren't on the battlefield and you were back home, you were probably in a factory making bullets, shipping stuff off. You were burning up rubber for some reason. There was a lot of rubber going on. A lot of rubber. Back
you got
in
a rubber
World War
graph
II.
for us? Can we see a rubber graph to see how much more rubber was used during World War II?
Yes, I'm going to show us, and we're going to correlate that to the unemployment rate, amount of rubber.
Completely match us. Yeah.
The most dramatic change in unemployment occurred between March 2020 and April 2020, representing a 10.3 percentage point increase at the onset of COVID. So you can see that nice little peak there at the end of the graph was COVID. And then, you've got some other peaks and valleys. So in 1975-ish, there was a recession. Unemployment peaked. Another recession in the 80s. A small recession in the 90s. You got the 2008 crash and recession causing a higher unemployment rate than even COVID. So just all stuff to think about, and it's nice to know our history.
Yeah, absolutely.
All right, so let's wrap up unemployment real quick. I just want to just touch on the unemployment rate. What is it? The unemployment rate is the percentage of people in the labor force who either are unemployed or and are actively seeking work. So the labor force only includes those working age, 16 and older people who are actively participating in the workforce, working or actively looking. So they take all of the people who are able, not willing, to work, and they throw them out of the equation. They don't even, if you've given up, if you're like, I'm not working, I don't feel like working, they throw them out of the equation. So there is, of course, a data point that can be analyzed here, the labor force participation rate. Labor force participation rate is just what I explained, the percentage of those people who are willing and able. The reason that I bring this up as we're talking about the unemployment rate is if you have 4% unemployment and 100% participation rate, that's a very different picture than, say, a 50% participation rate and a 4% unemployment rate.
Mm-hmm. Yeah. It's a great point. I'm not a big fan of this whole participation rate. I don't know where, I guess you just have a larger majority of people that, and I'm sure a lot of this correlates to when social media came out, because everybody wants to be an influencer. Everybody wants to be out there on TikTok, and they want to be twitching, right? Playing video games and dancing, making funny videos on Instagram or with a mic in their face talking about unemployment rates, right? Everybody wants to be doing that instead of getting out there and working. Now, we obviously still do contribute to the labor market. We are employed. But for any of those other bums out there that aren't, I think that's a big contributor, right? Let's get on YouTube, try to make $1 million. And to the ones that do, God bless you.
So, why not, in the spirit of things, throw one more graph at you here, Alvin. So this is the participation.
You got more? Don't tease us with a good time.
I have got here the participation rate over the years because, like I said, 4% of 100 is way different than 4% of 50. So let's look at it. Let's see if we can see anything going on here. So here we go.
Pull it up.
Participation rate. Here we go. All right. So take a look. You got the 1950s, 60s, 70s, like lower participation rate. But let's look at the, past 50 years. 1980, we're hovering around 65%. 90s and 2000s, we're up around 70% participation rate.
Yeah.
And then somewhere around 2010, it just falls off a cliff and hasn't recovered. And right now we stand at approximately a 60% participation rate.
Yeah. Yeah, it's terrible. It's just terrible. 2010, that's when, you really started to see the rise of social media. And I honestly do think that plays in. I think that, the people that just want to, try to be an influencer or do something on social media, or YouTube or whatever the case may be to try to make money. Or maybe there's, a bunch of crime syndicates popped up and people are making money that way. I'm not really sure, but I'd probably go with social media. But it's a great point, Ab, that participation rate, because a lot of folks don't get that, right? So
yeah, and maybe this episode's a little long-winded on the labor stuff, but sometimes you get pulled down a rabbit hole and your little rabbit ears and little bunny tail, just your cute little nose.
You're just gonna have to labor through this one with us. You know what I mean?
Mm-hmm. It's a labor of love.
You're gonna have to work through it.
Yeah, it's a labor of
like
love.
An American in the 40s. Work through
it. Like an American in the 40s. And you know what's funny about that chart?
What's that?
You kind of can see like the unemployment rate during World War II, the Greatest Generation, was 1.2. The participation rate, shot up, and we all have bared the fruits of their labor back in the day.
Yeah.
What's that old saying, Alvin?
You can't save it. You can't salvage it.
Maybe I'll edit that out. Should I edit that out? We are who we are. Get used to it.
We are who we are. Damn right. So anyway.
All right. So let's move on here from like the nitty gritty, boring. Let's move on from that.
Yeah.
Can you wrap up the show, Alvin, with a little like real world application of what we got going on, what we're doing?
Yeah, sure, absolutely. So we are going to go with our program Spotlight, brought to you by Alabama football and Nick Saban. The program is a home equity line of credit program that we're very excited about. Now, this is one that we've had access to, but I finally had the opportunity to work with somebody on it and get it closed. So this is a home equity line of credit program, right, that allows a homeowner access to the equity in their home without refinancing or touching their first mortgage. So it's great for those folks out there that might have gotten into a nice low interest rate in 2020, 2021, 2022. They have a ton of equity because their house is appreciated. However, they don't want to lose that low interest rate on their first. So this home equity line of credit program, it's probably the easiest loan. I think it is the easiest loan that I've ever done in my life. Couple of highlights on it. No appraisal, no income documents, right? No tax returns, no W-2s, no pay stubs, no nothing.
No nothing. Whole lot of nothing.
Nothing. Whole lot of nothing, right? Basically, the backbone of this thing is AI, right? So I punch, Tom homeowner's information in, basically address, date of birth, not even social or anything, email address, an idea of what they think their income is, and I get an answer right then and there. Hey, we're willing to do this loan, or we're not willing to do this loan. And if they are willing to do it, it spits out some terms and a maximum loan amount and what the interest rate's going to be, and the payment. You can kind of pick if you want a 5-year term, 10-year term, 15-year term, 30-year term. So really that easy to get the approval. It's a same-day approval. You actually can. Yeah.
So the options are generated, it's presented, and then you're there to talk the client through those options, right?
It's a great point. That's a great question there, Ab. So actually, I click on which option. I don't even have to. It's not the end all be all right there, right? I continue, and that information gets sent to the borrower, to Tom homeowner, if you will. and they plug in their information, finish putting in their information, they're able to actually go through the options themselves as well, just to make sure that that's what they wanted. Hold on one second. Ooh. So they're able to pick which option they want as well, just to make sure that they went with the right one. But long story short, so this thing can close and fund in as little as 5 days. 5 days. Start the process on Monday. Money deposited into your account by Friday. It can literally happen that fast. It is amazing.
Crazy.
We've never seen anything like it. So let's talk.
It's so crazy.
World. It's so crazy.
It's so crazy. So, if I may, you took the application. You closed 6 days later. How much money was funded or deposited into your client's bank account?
Yeah. So I took this guy's application, started the loan with this gentleman on 10/9, October 9th. The loan was approved on 10/9. We needed to get a couple things, a bank statement where he wanted the funds deposited, copy of his ID. We were clear to close by 10/15, right? 6 days later, we were clear to close. He wasn't able to close that day. He closed the following day, 10/16, right? This man had $300,000 deposited into his account, right?
That's insane. It's a big bag. It's a lot of heavy lifting to move $300,000. It's not like
Big
it was
bag.
10 grand. I mean, we're talking 300 grand.
300 grand, right, into your bank account. So, and that is, you had a weekend in there. You had Columbus Day or Indigenous Peoples Day thrown in there. So, and the closing was done virtually, right? It's an online virtual closing. You don't have to go anywhere. You don't have to meet anybody. You don't have to get all crusty, dusty, dirty. You don't have to get any ink on your hands. It's all done online. It's all done virtually. In and out. No muss. No fuss. Close in 7 days. So actually this will fund. So he hasn't had the funds deposited yet, but the funds will be deposited on Monday. So
Monday.
300 grand.
So
in his pocket.
you can go through this whole process at your computer. You don't have to leave your house. You can just be like Al Butt. You don't leave your house. You don't put on pants. You still get a lot of stuff done.
Why would you? Why would you want to leave? Why would you want to put on pants? Just doesn't make sense.
All right, cool, man. Well,
So
that's really cool.
That's the program Spotlight. So if anybody out there needs access to a little cash, that's a lot of cheddar you can get in your hands real fast with a little work.
And it doesn't have to be 300,000. 50, 75, 100, 150, whatever.
Ab, let me ask you this, right? So what do you think the interest rate was on this, right? What are home equity line rates usually?
10, 11%.
Right? That's usually 7.5%.
That's incredible.
7.5%.
It's incredible for a home equity line.
It's out of control. It's bananas.
It is bananas. It's bonkers. It's off the chain. It's off the hook.
Mm-hmm. All those
Alvin.
things. Yeah, crab pot. Oh, another thing. I'm sure you all noticed. Al got a microphone. Al stepped his game up, right? And everybody's going to act surprised and confused, right? Like Al, because Al didn't have a mic before, but little did they know. Ab, what was Al's nickname in high school?
Mike?
No. It was Crab Cake. But my middle name's Michael, so my friends call me Mike. Right? What did I play? What did I play in linebacker? What did I play in college in football? Mike linebacker. And you think I wasn't going to get a microphone? I'm 3 steps ahead of the game, man. We're back. Look at this. You sound great.
You do sound really good, and you were depriving the people of your buttery voice. Your nice, smooth, buttery voice.
Live.
There it is. Listen, you don't just have this squeaky voice, this crusty, squeaky voice with a beard like that. There's like so confusing for people to watch the show and see this weathered, dare I say, face, and then like this squeaky adolescent voice, and then you got picking up every like little, you got your dishwasher running, you're stomping around, you always batting on your desk, you can't sit still, you're a nervous wreck. Mm-hmm. So
shuffling papers, yeah.
It's nice that Mike got a mic.
Yeah, I appreciate that. We're glad to finally be official. So,
and I think that your official Now I know you're captain of the defense. I mean, you were a serious player, but before you were a Michael linebacker, you were just out there busting wedges for
That's
for
it, wedge
a
buster.
couple of yeah.
Which was my other nickname in high school, wedge buster. Wedge buster, dude. You know, a lot of that going on,
Yeah.
just busting wedges.
Busting wedges. All right, well, let's bust this wedge. And it's noon. Let's get back to our work day. I'll get this uploaded and out to the people.
High noon, great show, Ab. We'll catch you next week or the following.
We'll catch you next time we catch you. And that will do it. Goodbye.